In theory, trading is easy. The market can only go up, down, or sideways. We buy something cheap, and hopefully the market goes up, we sell it, and we make a profit. But if it was that easy, just why do so many people lose money? I thought we'd do a video on 3 points that you should consider and give some thought to before you start trading. I thought we'd do a bit of an educational video looking at 3 common points, some of which you might have heard before, but I've got perhaps a slightly different twist on it. So as usual in this video, we'll go through these, we'll jump backwards and forwards onto the platform and look at it and apply it to some real markets. Hello, I'm David Jones from Capital.com, and I thought we'd do something different for this video. We'd take a look, a bit of a sort of strategy education video, take a look at what I think are the 3 things you need to know before you start trading. There are probably more than 3 things, but I thought if we boil it down to 3 important things, and then we'll cover 3 more things in another video. So as usual, in this video, I'll talk a bit about what I think are 3 really important facts to consider that most people ignore, and most people, let's not forget, are losing traders, and how you can adapt it and put it into place in your own trading. And we'll jump onto the charts, onto the platform, just to put this into practice in the real world. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel, and it means we can push out what are hopefully lots of interesting videos throughout the week on different markets. And of course, every Friday at 2:30 UK time, I do a live stream direct from the YouTube channel. And that's actually where some of the points today have come from, some common questions that come up. If you're subscribed to this channel here, you get a notification from YouTube just as we're about to go live. Right, let's get into it and take a look at the first of the 3 things you should consider when trading. So point number 1, risk management and stop losses. Now, this isn't a very exciting topic, I think, for some people, but it is incredibly important. Let's not forget the basic rules of trading, or the basic facts about trading. If you look at the bottom down here of this video, there's probably a risk warning there that shows you that most people lose when trading. So the reality is you are probably going to be wrong more often than you think you are. So I think plenty of us come into trading and think, well, how hard can this be? I'm going to be right 8, 9 times out of 10. It's going to be free money. Of course, we know when we start, the reality is somewhat different. So I think it's important to appreciate there are going to be losses along the way. Don't put yourself in a position where you're risking a large portion of your account. You know, if you've got a £500 account and you're risking losing £200 on every trade, chances are you're going to blow your account up pretty quickly. So give a lot of thought to how much you're willing to risk losing on a trade. And when you do a trade, whatever it is, you should know, well, if I'm going to be a buyer here of Tesla, for example, if the price drops to X, then I'm probably wrong and I need to get out of the trade. So this is where the stop loss comes in. You know, it's important to have the discipline of when you put a trade on that you get out at a predetermined level. And in reality, a lot of people don't do this. They end up the wrong side of a market and they can't hold their hands up and say they're wrong. If we set our stop loss at the beginning, this really helps us with the discipline of the trade. Let's take a look. Risk management and stops is incredibly important. If we take a market like oil, there have been some real wild moves in the price of oil over the last 12 months. Last November went from $33 up to 68, and then we've seen a move from August of this year from 61 up to 84. So some really big swings. And I've spoken to quite a few clients over the last year who've been shorting oil, and unfortunately some who've been shorting without stop losses. And I think this is the problem. If you get into a market and you don't have a predefined level of risk, you can end up sticking your head in the sand and racking up much bigger losses than you're expecting. So it's a really important discipline. Every trade that I do on this account and my own account, it always has a stop loss in place. So if you look at some of the more recent trades on natural gas, for example, I was a buyer at 570 on natural gas, but if it fell to 5, I was going to get out of the position. I was going to close the trade, admit I was wrong, and move on. So far, that trade is up about £140 or so. If we look at a losing trade in here, Kraft Food, buying 52 at 37.64. The market's currently 36.34, so I'm losing money. But my loss is 35. My stop loss is at 35. So if it drops to 35, then bang, I'll be out of the trade. So it's a really important discipline to know where you're going to effectively throw in the towel if the trade doesn't work out. And I think if you're trading without stop losses, then really you're just a gambler. You don't need to take that view, but let's not forget, most people lose. And I think one of the big reasons most people lose is they do not manage their risk and set stop losses. The second point we're going to make is one that gets made time and again with trading. And if you watch this channel, you know it's something that I'm a big fan of. It's trading with the trends. The reality is, let's look at some markets. Let's pick Tesla again. Let's say the S&P 500. Let's say Bitcoin. Trends can persist much longer than we expect they will. So if we're trading in the direction of the trend, we're putting that market momentum on our side. You know, it would be much easier, for example, if we look at stock market indices, to be just buying the dips over the last 18 months rather than trying to pick a top. But human nature is, I think, to try and pick tops or bottoms. I think investors and traders, particularly when it comes to individual stocks, love a stock that's, for example, halved in price because they think, well, it can't go any lower. But of course, it can halve again and again and again. So when trading, you want to try and trade, or I want to try and trade, with the path of least momentum. If a market's going up, I want to look for buying opportunities. If the market's going down, I want to look for selling opportunities. Because let's think in terms of probabilities. Let's pick a market like natural gas that had a great run from April into October so far. And I know plenty of people were selling short into that strength, trying to pick the top. But again, probabilities. What are the chances that you pick the absolute reversal point in a major trend? It's much less painful and financially painful to go with the broader trend for the market you're trading. Let's take a look at what I mean. If you've watched any of these videos, you know I talk about trends an awful lot. I thought let's start off with the S&P 500, but there are a lot of trends to pick out in various markets over the last 12 to 18 months. This has been the trend since the March low. So for me, I actually did a trade on the S&P today. I want to be a buyer. Why do I want to be a buyer? Because the trend is up. Is it going to go up forever? No, it isn't. But at the moment, it's a market that just in the last couple of days moved out to fresh all-time highs. So by definition, it's a market where the trend is up. So I want to put the odds even slightly in my favor by trading with that major trend. Tesla's a really good example. No matter what you think of the cars, Elon Musk, or the valuation, the trend for Tesla is most definitely up, even when it sold off from those January highs. We just came back to that longer term trend line that had been in place since March of this year. And just in the last couple of days, it's burst out to fresh all-time highs. So again, you may think, well, it's crazy that Tesla is trading at $1,000 a share. But what's more important, I would suggest, is what the market thinks rather than what you think. So from my point of view, I want to trade with the trend. So if we did see any weakness in the price, I'd be looking for a buying opportunity. Let's come back to oil. The last couple of days, we've seen the price of oil back away from these multi-year highs. Now, some people may start to think, well, this is the top. The top is definitely in for oil. But as a trend follower, we would view movements against the trend as an opportunity to jump into the trend. So from my point of view, I'm just waiting for the strength to come back in and I want to be a buyer. I'm not going to try and call the top because the chances are I'm going to get it wrong. But what I want to do is use any weakness in an uptrend or any strength in a downtrend to put a trade on in the direction of the trend just to slightly tilt the odds and the probabilities in my favor. But a lot of people are counter-trend traders and most people lose money. The third and final point, which might be a strange one considering that I'm doing this with Capital.com and we're a broker and we want people to trade, don't be too short term. I think one of the issues people have, particularly when they first start trading, they end up looking at really short term charts, looking at maybe 1 minute, 2 minute, 5 minute charts, whatever they are. And the reality is, in my experience, that a lot of market moves are just noise. Just during the day, there's a lot of to and fro in the markets, a lot of chop. So I think we can all do ourselves a big favor when it comes to trading. Just take a step back and look at the bigger picture. Have a look at the higher term time frame. I only really look in these videos, as you know, at daily charts. For my own trading, I might go as low as an hourly chart, but I'm still very conscious of what the bigger trend is. I've got absolutely no interest in 1 minute charts. I think if you've just started trading and you're trading really short term, you're going to find it probably really frustrating because you're just going to get caught up in market noise. So what we want to do is focus on the bigger picture, if possible, and try and get locked in to the longer and larger and arguably more profitable trades. You don't need to be in and out of your market of choice 2 or 3 times a day, because you're paying the spread. And as I say, a lot of it is just noise. Let me show you what I mean. It's really easy to get caught up in the exciting short-term movements of the market. Here's a market. What's the trend in this market? It's pretty sideways, isn't it? But this is the Dow Jones 30, and this is only a 1 minute chart. So what we're looking at here is actually just the last 12 hours or so for the Dow. If we take it out to a higher time frame, so this is on an hourly chart now of the last month or so, then clearly that trend for me is actually up. So I think we can again do ourselves a big favor by taking a step back from looking at what we were looking at before, this little block here, to viewing things within the bigger picture. And of course, it's the same with other markets. Here's Bitcoin. You could take the view that, this market is a little bit sideways and a little bit boring, but all we're looking at here is a 5 minute chart. Let's not forget, if we take this out and look at the higher time frame, let's look at the hourlies. Then, of course, the bigger trend for me is still up. So I'm not too bothered about the really short-term stuff. I want to take a step back, look at the bigger picture, ideally run a trade for some time and try and catch the next big swing. There's something of an extreme example of that in this account. This is the account I use for doing the trades in the videos and on the live stream. The biggest winner at the moment, it's up about £1,400, is the Tesla trade from May, so 18th of May. So this trade's been running for about 5 months at the time of recording. The initial risk on that trade was £250. That's where my stop was. If I got stopped out, I'd have lost £250. So at the moment, I'm up, almost 6 times my risk on the trade. It is an extreme example, but it's been a great trend. And I think, once again, it does demonstrate the power of just taking a step back and looking on at the bigger picture. Don't get tied up in the minute by minute market noise. So that's it for a quick look of what I think are 3 really important points when it comes to trading. You may well have heard them before, but you've probably, like a lot of people, ignored them, which is why I think one of the many reasons that many people end up being losing traders. I hope it helps your trading to some extent. We'll come back and we'll look at some other points in a later video. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.